From the morning reading, oil hits new 2016 high close as rally continues. Stock rally holds. JPM earnings per share Wednesday before the open. All 9 sectors moved higher on Tuesday. XLE, XLB, and XLF were the strongest sectors, while XLI was the weakest sector. Oil futures rose $1.28 to close at 41.64. Breadth strengthened as advancers led decliners 3.95 to 1 on the New York Stock Exchange and 1.94 to 1 on the NASDAQ. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:46 a.m. Central Time, and I'm recording this in preparation for the market day of April the 13th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. I almost forgot, I've got another item from the morning reading. Let's go ahead and share that. Another breadth measure shows a buying thrust. Number of securities at new 52-week highs have consistently exceeded the number of 52-week lows during the past couple of weeks, even as most stock indices have meandered. Less than 3 months ago, the 10-day average for the new high, new low ratio was at 2%, and now it's above 90%. Other low to high cycles saw further gains in the medium term. Speaking of breadth, short-term momentum has picked up again. The McClellan oscillator turned positive for the first time in a week, while the summation index remains at an extremely high level, leading to positive one-year returns every single time. Crude oil finally closed above its 200-day average. Oil ended its longest ever streak below the long-term moving average, a sign many use to signal the end of a bear market. Other times that oil ended a long streak below its average did not consistently lead to positive returns, however. Okay, let's go ahead and bounce back to our normal routine and go to the morning report. So, overnight activity, pretty strong. All 4 broad market U.S. indices are up. The S&P futures are up over 0.5% at the time of this cut. Russell futures up about 0.75%, as are the NASDAQ futures. Dow futures, much like the S&P, are up just over 0.5%. Crude oil giving back a little bit in the overnight, down 1.8%. Euro down about 0.84%. Bonds essentially scratch, and gold down about 1.5%. In overseas action, all positive. China up about 1.4%. Hong Kong up over 3%. Japan up nearly 3%. Germany up about 2.2%. And United Kingdom up about 1.5%. In terms of U.S. macroeconomic reports for today, you have the regular inventory report from crude oil. And let's see if there's anything else. We have core retail sales and PPI in the United States before the market opens. And there's a 10-year bond auction later today. If you're a bond trader, you want to be aware of that. Also, take note for coming in tomorrow, we have the weekly unemployment claims. We have FOMC member Powell speaking, and we have core CPI. Let's see if there's anything else. I think that will probably take care of that. In terms of market conditions remain pretty low. And with the overnight activity we've had thus far, if that holds into the cash open, we would expect just continuing lowering of the short-term VIX. Right now, it's at a 13.71, skew right at the warning level. IV percentile very low across all 4 indices: S&P 14, Russell 18, NASDAQ 15, Dow 8. We did have a standard deviation move put in on all 4 of the indices yesterday. One of these was just below by a piece of a fraction, and I rounded it up to 1. But all 4 of these, and the essence of it is that they were up over 1 standard deviation move yesterday on a close-to-close basis. So we've had kind of a return of volatility. Though as we go to the charts, we'll see not really accomplished much, but if you look at this, we've had, 1, 2, 3 standard deviation moves to the upside, 2 standard deviation moves of one to the downside on the S&P, all in the last 8 trading sessions. And yet, as we go to the charts, we'll use the S&P futures chart first. You look at this, we're still within the range that we had from 4.4's top and the low of the 4.7 intraday swing low. I mean, all this action, in fact, you could really add all this up. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. In 11 days, we're still inside that same range, ranging from about 2017 to a high of about 2070. That's a pretty wide range given, but still, look at all this inside action as we go back and forth, back and forth. So we're waiting to see, does this actually break out? Is this just a bull flag? And, if you draw your line, you probably maybe tickled in on this day. You certainly are going to tickle in today if this action holds on a bull flag entry. And do we break this high here from 4.4? So watch that action. That high there was 2071.5 on the S&P chart, futures chart. So watch that action there and look to see a confirmed breakout above that swing high right there. If that happens, then we've actually started to say something. But understand that we've got basically a double top in that area, and then guess what? Another, essentially more than a double top, because we had multiple touches on this area here at about the 2100 area. So the distance that this is likely to run is fairly limited, but so far everything says that we are going to do just that. We're going to have another bull flag and break to the top side, run up here probably to the 2100 level, and then have our next significant test. In terms of Dow futures, very, very similar pattern. You see we're coming in on that intraday swing of about 2 weeks ago, and then just above this we have the double top area at about 17,900 area for the Dow. Very important levels to watch. NASDAQ also needing to break out at this last couple week consolidation pattern. If it does break out, this one's got a little bit more room to be able to run up towards this triple top area. Actually, we'll call this quadruple. So you can see there's a lot of overhead resistance here, including the all-time high at 47.39 coming into play on the NASDAQ. Russell's got a little room to get up here to the 1158.60 area, and that would likely be its next major resistance if it can get through this area here. So right now, everything is saying bullish and everything is saying bull flag breakout, though the opportunity to break out and run very far is quite limited in all of them before coming into major resistance. Let's take a look and see what volatility is telling us. Well, volatility is confirming bull flag breakout on the indices. It's coming down and currently trading at around a 15 handle on the VIX futures. Regular VIX product, you see, of course, it doesn't reflect last night's activity, but playing down below 15, so certainly in the land of bull markets. And let's take a look at gold. Gold has been on a breakout the last few days, though is giving back some of that right now. Probably, let's take a look at the dollar. Yep, see, the dollar has reversed, and that's taken a hit on gold. And then finally, we'll take a look at bonds. Bonds also coming back. So that would seem to be also confirming this equity breakout. So everything is aligned as you would expect it. All the inverse relationships are doing what they're expected. The dollar, the gold, bonds, VIX, equities, all are behaving as expected for an equity breakout. I don't see any warning signs other than the fact that you got so much overhead resistance above the indices. As they break out of this bull flag pattern, where are they likely to go? Not very far, it would seem. Okay, let's go ahead and go to the daily report. And a few changes here. We're still phase 4, price patterns near horizontal resistance. That's a classic appropriate description for what we're dealing with right now. But this is a bullish phase, and it continues to hold up. In terms of the 3 market timing signals, we've got something of a mixed bag. We have uptrend under pressure. It's our first market timing signal from IBD. Accumulation distribution score has improved, though. NASDAQ at a B- and S&P at a B. No longer either one of those in a warning situation. GMI index actually fell a notch to 4 out of 6, but still retains that buy signal since March the 2nd. In terms of decision point scoreboard, we still have this kind of mixed bag of both bullish and bearish on the short term, and both bullish and bearish on the long term, mixed in with mostly bullish on the intermediate term. So it overall is a market in transition with, I think at this point, yesterday I believe we said 60-40 bullish, and we probably go more like 75-25 bullish at this point. In terms of position sizing opinion, the portfolio model is coming in at 50%. The volatility model is coming in at 75%. Intermediate term market posture on the 4 indices are all very strongly bullish. You notice that the Russell flipped back after spending 1 day in a weak bear, flipped back to very strongly bullish. So all 4 are now back in the very strongly bullish camp. In terms of the current strength of trend, weak but significantly improving, and bottom line bullish. Hedge warning status will remain at a level 1 due to some of the mix from the market timing signals, the mechanical signals. So some caution here, but perhaps a little less caution than what we would have had yesterday. No change in the actual level, though, still level 1. No change in the strategy opinions. Option income strategies, cover calls, put selling, all okay, acceptable to initiate new positions for even novice traders. And you see the ratio recommendations in terms of how to construct these given the current market conditions: 1-to-2 ratio in the money and out of the money strikes for covered calls, and a 1-to-2 ratio low beta, high beta positions. In terms of volatility warnings, you see we still have a number of warnings here. Part of the reason why we still retain that level 1 hedge warning status. Market in decline, sharp increase warning, volatility ratio back into the reversal zone once again. NASDAQ distribution day count still at a 5. VIX phase has been increasing, though it ebbed in the last day. You know, we'd probably call this more neutral at this point. All 5 of the key intermarket risk aversion indicators are still in the risk off condition, though one of these, I think it was this third one, was just about to cross back up and go back as risk on. So the first sign of perhaps some changes coming in there. In terms of sentiment, remember sentiment can be extreme and stay extreme for prolonged periods of time. Basically, increased sentiment just tells us to look for potential reversal patterns, but stocks, both short-term and medium-term, are on elevated sentiment levels. Fear and greed index, 68, so you know, not particularly extreme on either side. No change here in terms of individual single symbols going to intermediate term market posture. We have a broad cross-section of both defensive and higher beta symbols with intermediate term market postures at this point. And this, look at this one, the sector percent change. Now understand that we've been so wrapped that many of these signals are relatively flat, almost like a moving average crossover with flat lines, and they wrap around each other, signaling both to the north side and the south side. Well, this is what's happened with this today. So many of these have turned into what appears to be a sea of green, but these could easily turn into a sea of neutral or red again with a single down day. That's how wrapped around flat most of these are. So just keep that in mind. Though yesterday was most definitely a very positive day. You see energy up almost 3%. Financials also up big, and you got to have financials participating to have a strong bull market. Big part of the story yesterday was materials, and the overlay between materials and energy very much was a driver in the talk of the market yesterday. So I think that's probably enough for today. And we're just going to wrap this thing up. I'll roll through these. If you see something that you have of interest, just hit the hyperlink, hit the pause button, and go to the hyperlink for the additional information. Disclaimers as always. Hit the pause button if you need more time to review the disclaimers, and then you see the hyperlink at the bottom for the full set of disclosures. We'll see you back here for tomorrow's trading with the Falcon Global Market Preview. Good trading.